We have with us Alan Wheatley, the editor of the book and the author of many of the chapters, and he will convince you that you should buy the book just by sheer dint of intellect and personality. So Alan was the global economics correspondent for Reuters News, based in London, from 1980 until just last year. He's reported from more than 40 countries over the 30 years he's worked for Reuters, including Frankfurt, New York, Washington, Paris, London, Tokyo, Singapore, and Beijing. From the Plaza Accord to the creation of the euro and the rise of China, he's covered many of the big economic stories of recent years. He's now going to tell us why the dollar isn't going anywhere anytime soon, and why we should all go back to the gold standard. I'm kidding on that part. So Alan, take it away.
Randy, thank you very much, and I'll echo his thanks to you all for braving the weather and coming out. Robert Mundell, the Nobel laureate, said great powers have great currencies. Now, that might not be self-evident to everybody, so I'm going to start off by spelling out a few cases, a few specific examples of how the United States has deployed the currency, the dollar, as a tool of power rather than other instruments in its arsenal to convince others to do what they otherwise wouldn't have done and to magnify America's economic power. And if it is self-evident to you that great powers have great currencies, then I'm going to ask the question, what happens if China, which it seems to me is the coming great power, what happens if China's currency develops into a great currency? Either way, the answers are in the book, and as Randy said, I hope you will take a look at it. I should emphasize that I'm the editor of it, but some of the chapters are by people who know a lot more about the subject than I do. Bob Zoellick has written a chapter. John Williamson, for those who know him, is one of the foremost authorities on exchange rates, the author of the Washington Consensus, among other things. So I think it's a good title, actually, Power of Currencies. But what do we mean? Well, the first thing that the United States did when it was mandated by the United Nations to invade Afghanistan was to send in special forces with suitcases and knapsacks packed with shiny, new $100 bills to buy off the warlords, to get them to work for America as scouts, providing supplies, maybe fighting. Now, here's a thought experiment. What currency would those warlords, would those Afghan chieftains have taken? Now, we can be cynical and say that many of them probably have Swiss bank accounts and would have recognized Swiss francs. But I don't think we would have seen the Swiss army leading an invasion. Maybe Britain's SAS could have gone in as an advance guard, and maybe savvy warlords would have accepted the British pound. But I would argue that there's only one country that could combine the military power and the currency power to do the job, and that is the United States. The ability for American companies and organizations to finance themselves in dollars, to trade in dollars, gives them a huge competitive advantage. They have no exchange risk, they don't have to go to the trouble and expense of hedging, because the dollar is the dominant currency. Oil, commodities are all priced in dollars, paid for in dollars, and so importantly are the underlying derivative contracts. These are the dollar's role as a unit of account and as a medium of exchange. You take them for granted, and so you should, but please never underestimate the importance that they have. They confer huge economic and financial power on American entities because they can transact in dollars. But then you put yourself in the shoes of somebody like Saddam Hussein. He needed dollars. And when America again invaded Iraq and they came across one of Saddam's palaces and deep underground in the basement, they found close to $1 billion. Most of it in dollars, some of it in euros, because even he was hedging his bets and diversifying. And there they were, shrink-wrapped in pallets, bearing being printed by the San Francisco Fed, among others. So how did he get those dollars? Well, he didn't just wire Iraqi dinars to the New York Fed and say, please send me 500, 700 billion crispy new greenbacks. He had to give the proceeds of Iraq's exports, the dollars that he'd earned from oil and gas, and transfer them to the United States. Didn't get them for free. So if you think about it, Saddam partially was financing his own invasion. And that is another concrete example of the power of currencies. The dollar, going back to its use as a unit of account, is the linchpin of the international monetary system. And there are dozens of countries, as you know, which manage their exchange rates according to the dollar. They're either pegged, semi-pegged, they track them in one way or another. And that means that these countries, these central banks, have to accumulate dollars in order to intervene in the markets to keep their currencies in the desired range. That creates a huge demand for dollars. And it also gives America huge influence. If you think back to the 1970s and the 1980s, certainly in the 1970s when America wasn't in great shape after the two oil price shocks, and there was huge pressure exerted by the administration on Germany and Japan in particular to expand their domestic demand so that there'd be more opportunities for American exporters. And the administration, the Treasury Secretaries, were quite overt about it. If you do not do our bidding, we will engineer a lower dollar by talking it down or by manipulating monetary policy. So that is a power that was really came to the fore in 1978 at the G7 summit, when Germany was forced to act as the locomotive for the global economy, and it was also evident at the 1985 Plaza Accord. So the US got its way. Obviously, I say obviously, I should never use the word obviously. If it's obvious, you don't need to mention it. The US got its way because it's the most powerful economy. True, but it also got its way, I repeat, because the dollar is the linchpin of the international monetary system. What's interesting is that specific aspect of US currency power, I think, is waning now because of the advent of the euro. It means that Germany is just one country among 18, the euro is a bigger force in the world, and also because of the rise of China, having displaced Japan as the biggest creditor. The United States does not have the same influence over China as it does over Japan. China is not a military and diplomatic ally, and it doesn't have a free floating exchange rate. But as one influence fades, another one grows. And I'd point to the example of Iran. The United States has been able to force Iran to the negotiating table. Why? Because it has threatened successfully to blacklist any financial institution that has any dealings with Iran. Why? Well, because all the dollar transactions ultimately have to pass through the New York Fed, and the Americans, with their allies, have been able to use that as leverage, as pressure on the rest of the world to force Iran to the nuclear negotiating table. And I'm not saying that it will pay off, but there's been more success over the past year as a result of these sanctions, supplemented incidentally by European sanctions, that I think it makes the case that the US has successfully used the dollar as an instrument of power. Finally, the other way that the United States is able to deploy the dollar as an instrument of power is it can live beyond its means. It can spend more than it takes in, running current account surpluses, in a way that many other countries by now would have been forced to go to the IMF. But because there is such a huge demand for dollars, America enjoys the exorbitant privilege that so angered France going back to the 1960s. So despite America's shortcomings, perceived shortcomings, economic and political, then 62% of global foreign exchange reserves are still held in dollars. 62% of the stock of dollars whose composition, whose breakdown is disclosed to the IMF, and only 54% of the global stock of FX reserves is notified to the IMF. But it still begs the question: why do central banks and other money managers, public and private, thirst for dollars? Well, America has the largest, deepest financial markets, bond markets, stock markets. I would argue also that diplomatic and military power are joined at the hip with economic power in the ways that I mentioned a few minutes ago, in a way that is self-reinforcing and makes the dollar still very much the safe haven of international currency markets. What happened after the great financial crisis in 2008? Everybody wanted dollars. What happened before the fall of the Berlin Wall in 1989? Every time I used to cover the foreign exchange markets, every time there was a political tremor in the East Bloc, in the Soviet Union, and people were getting nervous, the way that was transmitted through the foreign exchange markets is that people would sell the German mark and buy dollars. Why? Because there was a small theoretical risk that the Soviet Union might invade Germany. There was zero risk that Canada was going to invade, or Mexico was going to invade the United States. And if you think that financial military nexus sounds a little bit far-fetched, I'd encourage you to search out the episode that I recount in the book. Back in the 1960s, when America was suffering from inflation and overspending as a result of the Vietnam War, France, fretting at this exorbitant privilege that I was mentioning, was selling its dollars and cashing them in for gold at $35 an ounce. So the Germans said, well, maybe we should be doing the same. And the administration encouraged, a signed promise by the president of the Bundesbank, the West German central bank, that they would not sell significant amounts of dollars. And the threat, and this is in the Bundesbank archives, was that if they were to sell their dollars for gold, the United States would have to rein in its balance of payments deficit, its budget deficit, by withdrawing a couple of divisions from West Germany, and that would have altered the balance of military and strategic power. It's not an exaggeration to say that foreign exchange policy at the time was really an adjunct of US military policy. So let's fast forward to the present day and consider the same economic military nexus. America has close allies, of course, in the Persian Gulf and in the Far East. Japan, South Korea, Taiwan are all under the US military umbrella. It's natural for them to hold dollars as a quid pro quo for this military protection. It's either explicit, in ways that I certainly haven't seen written down, or it's implicit. But either way, I have a very hard time imagining the circumstances in which an ally like, say, Japan or Saudi Arabia would ever dump the dollar. There might be prudent diversification, but I think the glue holding these relationships together, including the currency link, is so strong that this gives a huge advantage to the dollar. People trust America. Now, inside the Beltway, that might sound a bit bizarre. You've got all these crazy politicians who refuse to cooperate with one another. There's permanent deadlock. You have no solution to the coming entitlement crisis. You've engaged in two wars that many people would say are misguided. But don't forget the advantages that you have that other countries don't have. You can be sure of getting your money out of America. You have impartial courts enforcing contracts. America is still a very safe place to to invest. And that gives the dollar a huge power of incumbency. Yes, the world could switch from the dollar standard to a more diverse international monetary system, but it would be very costly to do so. Just think of all the derivatives contracts traded in Chicago and New York and London and elsewhere, which are denominated in dollars. Setting up that infrastructure would be extremely costly, time-consuming, and disruptive. What's the incentive for doing so? I've mentioned the deep bond markets. Inertia was so strong, going back in history now to prove my point. The United States overtook Britain as the world's largest economy around about 1870. But it took until the First World War, when Britain was drained of men and treasure, that the dollar overtook sterling as the dominant, single largest global reserve currency. I think the more realistic threat than another global conflict is that America does undermine the very attractiveness of the dollar because of political mismanagement or because you get too deeply into debt. And for any economists in the audience, this is known as the Triffin dilemma, where the demand for dollars is so great from the likes of China, the United States has to meet that demand by creating the supply, and in increasing the supply of dollars, it undermines the very attractiveness of the currency that appeals to people in the first place. And the IMF, for anybody who is sad enough to be interested in it, has written very cogent, very lucid accounts of this danger, which at the moment is only theoretical, but could indeed become very practical at some point. Now, the biggest demand for dollars comes from China, and this is the second part of my talk, because if there is going to be a shake-up in the international monetary system in the years to come, it will be because of China. I think the status quo will prevail for the foreseeable future, which, happy to define that, but let's say for the next 20 years or so. China has $3.82 trillion in foreign exchange reserves, and its current account will probably widen this year to about $400 billion. Most of those are going into US dollars. The figure is unknown. The breakdown of the reserves is not notified to the IMF. Now, one of my co-authors, John Williamson, believes the fact that that China has so much invested in America is one of the few concrete advantages that the United States has because of the dollar status. The United States, in a word, has China over a barrel. If there were a financial crisis in China and China had to sell these treasuries to repatriate the money, to prop up their banks, what would happen? Price of bonds would fall and China would lose a lot of its wealth. On the other hand, there are signs that China wants to escape this dollar trap. Why? Well, I mentioned the global financial crisis. This, for China, was the final straw. It was the latest in the long list of crises going back to the breakdown of Bretton Woods, the Latin American debt crisis, the Asian financial crisis, the savings and loans crisis, and more besides. Now, in China's eyes, America, in the course of this crisis, was not discharging its primary responsibility as the guardian of the world's premier reserve currency. It was neglecting the value of the currency by running big deficits and pumping up bubbles through easy monetary policy. And there's plenty of criticism along those lines, not just from China. Second, you don't have to live in China very long, and I was there for 6 years before you are aware of the grumbling of ordinary people who are asking, well, why should we be subsidizing the world's hyperpower? 3.82 trillion in reserves is equivalent to 3,000 approximately per man, woman and child in a country where 300 million people do not have running water. Why shouldn't that money be invested in China instead of in the United States? I leave deliberately to one side the rejoinder that nobody was forcing China to accumulate these reserves. They could have allowed their currency to rise, but nobody accused China of being consistent in its economic policy making. Thirdly, China, so there's a lot of grumbling on the internet, why are we putting all our money into the United States and other Western countries? But the third reason, and this speaks very much to the book, China is waking up to the power, the non-economic, non-financial power that a reserve currency or an international currency bestows. Great powers have great currencies. And who is going to be greater than China? Here's a country with 5,000 years of history, invented paper money, invented gold, invented golf and many other sports besides, invented gunpowder, invented all these other things, and here we are regaining our place at the top of the economic tree. Soon they will surpass the United States as the largest economy. Surely it's right that we should have a big currency which is commensurate with our economic power. What was the result? Well, after the financial crisis in March 2009, the governor of the People's Bank of China, Zhou Xiaochuan, proposed what he called a super sovereign reserve currency. The details are not important. It was a political message that it sent that China was fed up with the quasi-monopoly that the dollar was enjoying in international markets and international policy making. So what did China do? Well, if you want an international currency, you've got to internationalize it. So a few months later, they started a scheme allowing exporters and importers to settle their trade, not in dollars, but in RMB. They do so in Hong Kong, not in China, which remains very much a walled garden shut off from the rest of the world. They did so in Hong Kong, which functions very much as a financial laboratory for the Communist Party. And it's been a fantastic success. They've gone from a standing start, and within 3 or 4 years, 13 or 14% of Chinese trade is now settled and paid for in RMB. And that can only grow. You will see more Chinese foreign direct investment paid for in RMB. You'll see more Chinese lending in RMB. Who knows? Maybe it would make sense for Chinese state-owned companies to say to the Zambian copper mining companies or to the Angolan oil companies, hey, why don't we start dealing in RMB rather than dollars? And that, I submit, would be a real flag, a real challenge to American primacy. However, at the moment, we see the RMB functioning only as a unit of account, as a medium of exchange. People are settling trade in RMB, but they are not using it as a store of value, and that is the distinguishing characteristic of a reserve currency. People are not holding their savings for a rainy day in the RMB. So if you've owned RMB as an exporter or as an investor, you need somewhere to store it. And that storage vehicle does not exist at the moment. Why? Well, as I've just mentioned, China is still closed off from the outside world by capital controls, which are more or less binding. There is a fast-growing market in offshore RMB bonds in Hong Kong. It's called the dim sum market with remarkable originality. And the Chinese have promised that they're going to accelerate this process. I don't know how much publicity there was in the US press for the meeting that the Communist Party held in November, the third plenum of the 18th Party Congress, but there were a long laundry list of promised reforms, including speeding up financial liberalization. But we've heard this before. They first promised to make the RMB freely convertible as far back as 1993. We're still waiting for it. Before that to happen, the banks have to be strong, well supervised. certainly it's in the press here and in Europe, that there's a crisis waiting to happen in the Chinese banks. So I don't think the conditions are ripe for them to take the risk of opening their borders to huge waves of volatile capital that the banks are going to have to cope with. If the markets are open to capital flows, it means the exchange rate and the interest rate will be overwhelmingly market-driven. At the moment, it's the Communist Party that determines the cost of money, either in the form of the exchange rate or the interest rate. And that's the heart of the matter, I think. The Communist Party controls the Chinese economy by allocating the country's savings through state-owned banks to state-owned enterprises, all of which are run by senior members of the Communist Party. It is not, whatever you read, a market economy. At best, it's a market-Leninist economy. And I'm not imaginative enough to conceive of a China where the Communist Party voluntarily gives up these important levers of power. Control and patronage, to say nothing about how the current system allows the favourite few to accumulate huge amounts of wealth and then to salt them out of the country. So it's a genuine dilemma for the party. They need to liberalise the economy in order to sustain the growth that keeps them in power. But if they do liberalise, they risk unleashing these financial forces that could overwhelm the system, overwhelm the economy, and undermine their basis for governing, undermine their monopoly political power. It's a balancing act, and if you're on a tightrope, you take tiny steps, and that's why my assumption is that they will continue to liberalise only gradually. That's why I see the RMB, the Renminbi, becoming at best only a junior reserve currency. The Japanese yen accounts for about 4% of global foreign exchange reserves, same as the British pound, and I can see the RMB attaining that same status over the next few years. But I don't see it, frankly, reaching the levels of the euro, which accounts for about 20% of global reserves. But let's suppose I'm wrong, because nobody has a monopoly of knowledge on China. It's completely opaque. And that brings me on to my main point. It's that very opacity, which is why it will take China a long time to build the RMB into a reserve currency. Even if they fulfill from one day to the next all the technical conditions of having a strong banking system, opening the capital account, liberalising interest rates and exchange rates. Why would anybody in this room, why would any central bank put their money into the RMB? I'm not saying that the issuer, the country that issues a reserve currency has to be a democracy. But I'd be interested in the Q&A to see what people in the audience have to say. But it is a fact of history that a reserve currency does need to enjoy the trust and confidence of the people who are holding it. And that trust and confidence takes decades to build. Take America. The Federal Reserve was created in 1913. Why? Well, it was a direct consequence of the 1907 crisis that J.P. Morgan had to quell by grouping together all the other bosses of the big banks in New York in the absence of a central bank to calm the markets. There was the deliberate attempt, successful attempt by the fledgling Fed at the behest of the New York banking establishment to internationalize the dollar, which they did by allowing American banks to branch offshore with the purpose of ending London's monopoly on trade finance. And that worked. And Barry Eichengreen has written how, has demonstrated how this is a perfect example of how quickly things can change. That even though America had overtaken Britain 40 years earlier, the dollar hadn't made inroads into sterling's reserve currency dominance. But when it did happen, the tipping point came very quickly. Now, far be it from me to put myself on Barry Eichengreen's level, but I would argue that there is a deeper factor. America wouldn't have been able, the dollar wouldn't have been able to attain that status as quickly as it did if America hadn't spent a century building up creditworthiness, credibility, trust. What did Alexander Hamilton do in 1789, 1790? He made sure that the federal government assumed the debts of the states. What happened in 1812 when we were burning down the White House? Thank you very much, America. You kept paying British bondholders. You made sure that those coupons got through to Barings in London, and it wasn't easy. And I would argue that that investment that you made in building up America's reputation and credibility paid off. Because when the final building blocks, the institutional building blocks, were put in place, creation of an independent central bank and permitting banks to go offshore, then you were able to draw on this deep reservoir of trust that had been filled, if you want, over the preceding century. Creditworthiness stems from the Latin credere, to believe, to trust. And China is perhaps admired, respected, but I would argue it's not trusted enough to be a repository of a reserve currency. So let me finish. Where does that leave us? Ideally, we would have a more balanced international monetary system. The present one is fragile. We've seen that. It would be better if there were less pressure, less onus on deficit countries such as the United States to make the adjustments. In a way, what we're seeing is as Bob Zoellick says in the book, the unfinished business of Bretton Woods. John Maynard Keynes wanted the adjustment of global imbalances to be equally shared between creditors and the debtors. Harry Dexter White, representing the United States, which at the time was a big surplus country, a big creditor, said, no, it's you guys, it's the others, the debtors, who have to tighten your belts. And that was the premise, that was the basis of the Bretton Woods system. And just in parenthesis, it's a rerun of what we're seeing in the euro at the moment, where Germany, the creditor, is telling the Greeks and Spaniards and the Portuguese, you have to make the adjustment, not us, the surplus country. Ideally, there would be an international currency, the super sovereign reserve currency that the Chinese wanted. We have one, the special drawing right. It was created in the late 1960s to solve the Triffin dilemma that I mentioned earlier. Unfortunately, it hasn't taken off, and there is no political will, I think, for that to happen. Having said that, the dollar is going to remain dominant, but I do think there will be more of a kaleidoscope of currencies, and one of the interesting chapters in the book is about how regional currencies might attain more prominence because they're used in regional supply chains. Multinationals and knitting, forging, increasingly intricate supply chains, and you can imagine, for example, that if Africa were to develop over the next century or so, then there'd be an incentive to use the Nigerian naira or the South African rand in that regional supply chain. So I see the RMB being one of those regional currencies, minor reserve currencies, a junior yen, if you want. So let's assume that that is the case, and I have to insist I have no monopoly on wisdom. How will China feel if it doesn't grow to challenge the dollar, if its ambitions are not realised? Because history shows that countries with currency power like to use it, and I think it's a recipe for friction, politically, diplomatically, if China does get frustrated. There's already a lot of resentment in China with regard to the United States because of a feeling that they're being deliberately, let's not say encircled, but targeted. You think of the pivot to Asia, the positioning of troops in Darwin, the exclusion of China from the TTIP talks. These are issues that don't go unnoticed in Beijing. There's a feeling that China feels it's being held down. Conversely, what if I'm wrong, and the RMB does flourish, and these sorts of deals that I mentioned earlier take off, and the RMB does become widely used as a medium of exchange, and let's say there is democratic liberalization in China, people come to trust the currency more rapidly than I think will happen, and it becomes a store of value. People are quite happy to put their money in the RMB. Then you can imagine that the swap lines between central banks, which nowadays are almost exclusively in dollars, I can very well imagine that the PBOC, which already has a series of 20-odd swap lines with central banks around the world, this Chinese central bank, extends those. And let's take Argentina, or let's take Nigeria, and there's a crisis, and they need to go to, who are they going to turn to for help? Traditionally, they would go to the IMF. Well, the IMF, not giving away any secrets there, is widely perceived as a proxy for the US government. And the conditions that are imposed in return for these emergency loans are very much conditions that come from the US Treasury, or they are endorsed by the US Treasury. China, of course, would also impose conditions, but I suspect they would be lighter, and the quid pro quo would be very much in China's interest. So I think that would be a recipe for tension. If China were to start displacing the IMF in America's backyard. Here's a thought experiment, going back to the very first episode I mentioned. Please don't take this too literally, because I've only just thought of it. Well, let's suppose in 30 years' time, 20 years' time, there's a need to pacify Pakistan, and China is given the UN mandate to do so. And the reason this is not a realistic thought experiment, that's why it's a thought experiment, is that China would never allow itself to be mandated to head such a group. But imagine they did go in with secret agents and special forces ahead of time, and they were carrying suitcases and knapsacks full of RMB rather than dollars. How would America feel that? That would be a concrete demonstration about how the power of currency had switched towards in China's favour. I'm going to finish with a quote by one of the academics who's written a lot about this, Jonathan Kirshner. Quote, "As long as there are states and money, states will attempt to manipulate monetary relations to advance their political objectives." That's what my book is about. I hope I've given you food for thought. I hope you'll read it, and I'd be happy to take questions. Thank you.
Thank you so much. We have 25 minutes for questions, so we'll open it up right here.
Yes, Chris Bidwell, Federation of American Scientists. Alan, thank you very much for a great presentation, very insightful. And just to let you know, the statute of limitations on arson is well under 200 years. You're safe to walk the streets of Washington, D.C. My question was with regards to current Iran sanctions and some of the ways that Iran is trying to get around these sanctions by denominating some oil transfers in other currencies. Do you see that as a threat to the power and security of the U.S. dollar, as a reserve currency, or is it too small potatoes, or is it a harbinger of a worse problem coming down the road?
I would take that as an example of the power that the United States has and has effectively deployed, because it has forced Iran to do things that are very complicated, very difficult. There was a gold trade between Iran and Turkey, which was closed down. There's a lot of trading in oil with India, South Korea, and China in those countries' own currencies, and the proceeds are piling up in escrow accounts at those respective central banks. Iran cannot spend the money, only for two-way trade. So yes, I see what you're getting at, but I would still hold this up as an example of how the central dominant role of the dollar in the international financial system gives Washington the ability to apply leverage to Iran.
Peter Rogers from Transnational Strategy Group. I want to ask you about the euro. Ever since Draghi announced the outright monetary transactions policy, there's been perception that the European Central Bank really now is a lender of last resort for the eurozone. What's your calculation about the relationship between the euro and the power of its member states? Do you think that the member states are punching below or above its weight, given the role of the euro?
I deliberately didn't go into the euro for sake of time. I freely admit I'm a strong pro-European. I was at Maastricht on the night that the treaty was signed, so I've got a lot invested in the survival of the currency. It's true that the announcement of OMT, outright monetary transactions, was very important because it did take the European Central Bank a long way down the road to becoming a lender of last resort. But it is still by far from being an untrammeled lender of last resort. More importantly, to answer your question directly, the euro remains a currency without a state. And what is happening now is that the 18 member countries of the euro area are beginning to build the institutional underpinnings of the currency that should have been established before the currency was actually launched. So they're in the process of building a banking union, they're in the process of beefing up the fiscal union, but it is still very puny, and there is no political support in Europe for a more cohesive political structure that would allow the country, the Eurozone members to act as one in any field, let alone to deploy the currency as an instrument of power. But I think it's worth adding, there are 18 members at the moment. I will take bets with anybody in this room that in 10 years' time there'll be more than 25. The euro remains extremely attractive for smaller countries which at the moment are vulnerable to pressure from big neighbours on their eastern border, brackets Russia. So that's why Latvia has just joined, Lithuania is going to join next year, and many others in Eastern Europe would join in a heartbeat if they could. But that is very much the attraction of the European Union rather than the single currency. So as much as I would like to say that in 20 years' time we will see a stronger central budget and maybe even the core of a military capability, I still don't think that would be enough for people to invest in the euro, because it was, to use the phrase I was mentioning earlier, that Europe had this same military financial nexus that the United States does.
Right up in the front, we have a microphone now, so it's coming your way.
Mike Macetic, PBS Online NewsHour. Where is the chicken and the egg in the relationship between military power and dollar power? You mentioned once World War I. I mean, World War I, World War II, which totally bled the United Kingdom. Not that we're anticipating anything that disastrous coming up, but where does the balance flow here?
Good question. I think it flows both ways. The causality runs both ways. People invest in the dollar because, let's list the reasons. The United States is the largest economy. It's the most productive, the most competitive. You have a technological edge over everybody else, but you also have that unrivaled military power. And I can only point to the academic literature where there is an overwhelming consensus that at the margin there are many countries around the world where if they have a choice between investing, say, in the euro or in the United States, they will choose the dollar primarily for financial reasons or economic reasons, but very much also because of this belief that by placing their savings with the United States, they're cementing the diplomatic and strategic ties, and including, importantly, the military ties, that means that in a crunch, the United States would be more likely to come to their rescue. Again, just as a thought experiment, if, I'm trying to think of an example, but the likes of Kuwait or South Korea, the United States has treaty obligations to a country like that, which is cemented, which is reinforced by the currency commitment that they have. So I can't answer the question satisfactorily. The causality runs both ways, I would say.
My name is Janine McKay, and I was invited. I read. I wonder about the issue of creativity, because I was at a neuroscience meeting last week and talking with one of the researchers, and they were talking about China actually buying an entire lab, just buying the whole thing, so they could get the results of it. And I'm just wondering if that's one of their problems. They can't, because they have to rule everything. They have to, creativity is outside the box. And I wonder if that's not something that has to be dealt with in order to get ahead. I just toss it out.
Certainly China has the most powerful supercomputer in the world at the moment. Last I read, at least. When you think how quickly China has built out its high-speed rail network, it might not be a good use of money, but they have built it in record time, and it dwarfs anything in Europe, let alone the United States. I'm not quite sure where creativity comes in. They are in a hurry. That's for sure. They're making up for lost time. They're not. The present system from the outside might appear as though it doesn't lend itself to creativity, but in China, it's an incredibly diverse, vibrant society, stretching all the way from the arts to tech startups, and I don't know what to say. I'm tempted to think of draw a parallel with Singapore. We used to live in Singapore before we went to China, and they recognized, as you have, the same problem. We've got to be more creative. So what did they do? They set up a government commission. The Chinese haven't had to do that. But I'm not quite sure where it fits into the currency, except the soft power is an important attribute of a currency. It's very intangible. Please don't pin me down with a chicken and egg question, how it fits in, but I'm convinced that it is a factor in the attractiveness of the dollar at a subliminal level. And I think you're quite right if you're saying that China at the moment doesn't quite inspire that same admiration for its creativity. But what I would say is that it's coming.
Hi, my name is Oliver Kim. I'm a correspondent for an Austrian newspaper here in DC. You spoke about the importance of trust for great currencies. Could you explain to us a bit the discomfort of Chinese depositors with the way their savings are being treated by the Chinese banking system? Because what I know from a very scant reading of financial news is that actually, if you're Chinese, you are more or less being expropriated if you put your money in your banking account, because there's a very complex system of indirect subsidies for the state banks and so forth, taxes of whatever. Could you explain a bit how happy or unhappy the Chinese are with their own financial system, and whether that could translate into an opening of the way of running the currency?
First of all, I would say you're talking about financial repression, where interest rates are held down artificially by the authorities for one reason or another, either to make it easier to run down debt, to pay down debts, or to make it cheaper for the state to mobilize capital and then allocate it to their preferred recipients. Now, last time I looked, everybody in this room, everybody in the United Kingdom, everybody in Europe has been expropriated, insofar as the central banks in all our countries are holding interest rates at near zero, below the rate of inflation, and so your money is losing value day by day, and China is no different. The deposit rate is of 3%, 3% for, can't remember, I think it's around about 3%. Perhaps 1.9% for one-year deposits, is pretty much in line with the rate of inflation. So on that yardstick, the Chinese are in fact doing better than you are in the United States or we are in Britain. It is absolutely true that the banking system in China is dominated by state-owned banks. But I don't think that people feel expropriated. On the contrary, because they know there is no deposit insurance system in China. Why? They don't need one. They know that the Communist Party, the government, would never allow a big bank to go bust. It's as simple as that. Because there would, just as in this country, I mean that's the job of the Lehman Brothers wasn't a retail bank, but by and large, look at the United Kingdom. Northern Rock was bailed out, which was a mortgage lender, Lloyds, Royal Bank of Scotland. Countries in the West do not let systemically important banks go bust, and nor would China. There's a very valid argument, debate to be had as to whether China is mobilizing and deploying those savings intelligently, and I don't think they are. I share the consensus that there's too much investment, but there are very few outlets other than keeping your money in the bank. So the question is, if the capital account were opened, would the man in the street take their money and put it in a US bank or a European bank? And nobody knows the answer to that. And my assumption is that we won't get to find out, because they will retain sufficiently stringent capital controls that we won't see the opportunity for large outflows. What I would mention, though, is that there's a large home bias, I think, in any banking system. You look at Japan, 92% of Japanese government bonds are owned by domestic investors, even though the yield next to nothing. I suspect there are not many people in this room who would open a bank account in Austria or London because you're upset with the dollar. You need dollars for your day-to-day business and living expenses and so on and so forth. There aren't that many of the 1.3 billion Chinese. Most of them have, well, most of those who have some money in the bank would be quite happy to keep it there, I suspect. I don't want to minimise the risks that China is facing, and I'm not saying that the big money holders wouldn't move their money, but I don't see that as the primary risk of facing China, the risk of capital outflows by the man in the street.
Thanks. I'm Howard Schatz from Rand Corporation. I have a follow-up to the chicken and egg question. It's more immediate. We learned yesterday publicly that the United States may be in for a period of serious military retrenchment. What's your best guess about what that might mean for the U.S. currency?
I don't have the figures in front of me, but the United States spends more on its military than the next 8 or 10 countries combined, I believe. Even if there is retrenchment, it will remain, the United States will remain by far the largest, most dominant military power. Europe is still cutting defense spending. China launched its first aircraft carrier in 2011, which was built on the unfinished hulk of a Ukrainian aircraft carrier, and they're in the process, they've kitted it out, but they don't have any battle groups. They have no means of projecting that military power. So I don't see any reason why somebody should think at the margin, I'm no longer going to invest in dollars because American military power has been diminished. I think there is an interesting related question. As America attains energy self-sufficiency and therefore has even less of an interest in guarding the sea lanes of the Persian Gulf to make sure that the oil flows freely, would your commitment to keeping a huge naval presence there be as strong as it is now, especially if you have the pivot to Asia? My guess is that you would, because oil being fungible, then if the Middle East oil lanes were closed, then the price of the oil coming from the rest of the world would grow. But I think it's interesting to speculate on what might happen as more oil flows to Asia, China, India, and others, whether in a decade or 2 decades' time we might see China and others approaching the United States and saying, hey, we're willing to share the burden of global responsibility. We realize that this is a global public good that you are providing, and we, Chinese or Indians, being good global citizens, realize it's in our self-interest to share that burden with you. I'm a bit naive. I'm thinking that might happen peacefully. I mean, smoothly. There's a question over there, I think. Yes.
Hi, my name is Arshad Mohammed. I cover the State Department for Reuters. I'm not a disinterested observer. Alan is the man who brought me to Paris at the age of 27, and I sat next to him in the Reuters Paris Bureau for 3 very happy years. 2 things I wanted to ask you. One, to go back to the lady here's question about creativity, I don't think this has anything to do with currencies, but why is it that the United States seems able to produce entrepreneurs that create companies like Microsoft or Apple or what have you, but China, at least thus far, doesn't seem to? And then the other question is, and I don't know that this has anything to do with currencies, but what is your interpretation of the increasingly assertive position that the Chinese have taken in the South China Sea and the East China Sea? Why are they doing that? What is the likelihood that the way the U.S. administration responds will be reassuring to the other countries in those disputes? But maybe that's not your bag.
Well, the answer to creativity is that we've got garages, didn't you know?
I'm going to answer the question in 12 parts. The first part will be divided into 3, and we'll still be here at midnight. I'd turn it around, Arshad, in a way, and look at China, which, first of all, is a single-party state, which by definition almost doesn't encourage creativity. We're coming from a very low base, a low standard of living. Per capita GDP is about 6,000. The wonder is that they're doing as well as they are in the creative stakes. WhatsApp, founded by a Ukrainian, in the news. Well, WeChat, which is the Chinese version, has more users than WhatsApp. So if we take that as our benchmark of creativity, I'm pretty impressed by what China's doing. And we look at the fascination that there is for Chinese art, modern art at the moment. I'm not an expert on it, but maybe a lot of it is derivative. But some of it, a lot of it fetches very high prices from people who are better judges than I am. So I'm a bit out of my depth on the origins of creativity, but I would be wary of writing China off. As for China's assertive position in the South China Sea or the East China Sea, I think my take on it is that there is no ideology in China. They certainly don't believe in Marxism. They believe in making money. And the glue that holds the country together and lends the party its legitimacy is nationalism. And the easiest way to keep people on side is to wave a big stick, especially at Japan, because the hatchet from the many years of Japanese occupation has not been buried. Now, I don't want to take sides on that dispute because it's very contentious, and depending on your history books, then right is on the sides of both people. But I think it ties directly into the currency question as follows. Even if China has right on its side in the territorial dispute, it's hardly making friends and influencing people by going about by behaving in such a heavy-handed manner. I'm thinking of the 9-dotted line delineating China's territorial claims on all the passports, and the way it's very brazen and naked in its denunciation of anybody who dare challenge its territorial claims. I think this fits into the soft power argument that China is going to take a long time for people to feel comfortable with how China is projecting its power, but it plays very well domestically, and in the absence of any guiding and ideology apart from the desire to make money, then it serves a useful purpose.
Let's take this one last question right here.
Thank you, Silvina Bartnick, Global Outcomes. I just want to ask, well, to complement, first thank Alan for a very thought-provoking presentation, but to complement on the issue of eventually China becoming sort of lender of last resort, I mean, into sort of its role in the international financial system. I mean, I can tell you that sort of from the Latin American perspective, under the label of foreign direct investment, in the last few years, there has been a very significant participation, which has in some cases been sort of just kept at the sort of announcement level, but in some other cases it has actually turned into actual investment, although very sort of more modest than initially expected. But you know, it's coming. It's coming in a significant way, primarily driven, I would argue, by the willingness to tap into commodities of different sorts. But that I would argue that not only applies to Latin America, but also about what we've seen in the African continent. Thanks.
And also the. You chaps would call the Caribbean, and I would call the Caribbean. Yeah. Thank you.
So I'd like to end asking Alan sort of a 30,000-foot question. This book came out of a conference run by our Geoeconomics and Strategy program. We are the International Institute for Strategic Studies. But it seems, and if you read the book, for instance, in Geary's chapter on Iran sanctions, it seems that there is a disconnect between understanding geoeconomics and understanding strategy, or at least that strategists often don't think about geoeconomics as part of their toolbox. So with Iran, or with sanctions, financial sanctions, for instance, they didn't seem to work across the board for years. You're impacting the poor people in the country, but the leaders were able to continue to do what they did until the sanctions on Iran, which you read the book and you say, well, if I had understood the global financial system better, I would have understood that right away, and that would have been effective sanctions tool. Wish we had thought of that 20 years ago. Why is it that strategists, people on the walls here, people who come through this room pretty regularly, don't seem to understand this stuff and don't think about it as much as they should and don't have it in their toolbox? And sort of the follow-on question is, how do you make that sort of part of strategic thinking?
I'd like you to answer that, Randy. I have no idea. I'm just an economics journalist. I find it fascinating that it did take them so long to find this lever to pull that would produce the desired result. I would say, from my research working on this book, that there is in general an underappreciation of the power of currencies. I would say that, wouldn't I? But I can't give you any more definite answers than that. What's your take?
Well, my take as a shill for the IISS is that this book hadn't been written, and now that this book is out, strategists should read it, and then they'll be able to use this in their toolbox. But I think it's the way in which the academy is perhaps split up, where you take a few economics classes when you're studying strategy, but you study war much more. I think I can't do math, but you probably can do math. I'd like to believe you can.
No, I can't.
I don't know the answer, but I think that that's perhaps the reason why we have this geoeconomics and strategy program, is to recognize that they are together, that they are important. Economics is an important tool for strategists, and vice versa. So I guess we'll leave it at we have an unanswered question, but something that we're going to continue to try to answer and try to improve upon. So I hope, again,